Imagine a world where loan approvals, dream cars, and houses are within your reach, all thanks to 3 digits that pack a powerful punch: your credit score. But here's the shocker. A staggering number of people are walking around unaware of how their credit score is calculated or how profoundly it impacts their lives. Did you know that a difference of just 100 points on your credit score could mean thousands of dollars saved on loan interest rates? That's right, thousands. We're not here to talk about average credit scores or settling for good enough. We're here to unlock the secrets to achieving a stellar credit score, quickly and guaranteed. From the myths surrounding credit utilization to the truth about credit inquiries, we're diving deep into the strategies that can catapult your credit score to new heights. So, if you've ever felt puzzled by your credit score, wondered how to improve it, or simply wanted to get ahead in the financial game, you're in the right place. Stick with us as we unveil 10 chapters packed with actionable tips, easy-to-understand strategies, and maybe even a few surprises that will empower you to take control of your credit destiny. Let's get started and unlock the door to your financial future. Chapter 1. Introduction to Credit Scores. Imagine walking into a bank, feeling confident, knowing you're about to get the best deal on a loan. Why? Because your credit score is shining bright. But wait, what's a credit score anyway? Think of it as your financial report card, but instead of grades, it's a number between 300 and 850. The higher, the better. Here's a fun fact. Did you know the average credit score in the US hovers around 710? That's like being a solid B student. But we're not here to be average, we're here to be financial valedictorians. Your credit score is a big deal because it affects your ability to borrow money or get products like credit cards. It's like the financial world's way of saying, "Hey, can we trust you?" And you want the answer to be a resounding yes. So, how do you make sure your credit score goes from just okay to excellent? Well, stick around, because we're about to dive deep into the strategies that can boost your score faster than you thought possible. Chapter 2. Factors affecting your credit score. Understanding what affects your credit score is like unlocking a secret level in a game. You suddenly have the power to improve your score because you know what moves to make. First up, payment history. It's the heavyweight champion, making up 35% of your credit score. Late payments are like penalties in this game. They can drop your score faster than you can say, "Oops." So, always pay on time. Set reminders, use autopay, do whatever it takes. Next, we have credit utilization, coming in at 30%. This is all about how much of your available credit you're using. Let's say you have a $1,000 credit limit, and you've used $300. Your utilization is 30%. The magic number? Keep it under 30%. It shows you're not overly dependent on credit. Then there's the length of your credit history, making up 15%. The longer, the better. It's like a fine wine, it gets better with age. So, think twice before closing old accounts, even if you don't use them much. New credit and credit mix each play their role, too, both affecting your score but to a lesser extent. Diversifying your credit types and being cautious about opening new accounts can work in your favor. Here's a strategy tip. Start small. Even securing a small line of credit and managing it well can set the stage for a score that skyrockets. Armed with this knowledge, you're on your way to boosting your credit score. Stay tuned as we dive into more strategies in the coming chapters. Chapter 3. Check your credit report for errors. Imagine you're playing a video game, but there's a glitch that keeps you from leveling up. Frustrating, right? Now, think of your credit report in the same way. It might have errors that are holding back your score. Surprisingly, a study by the Federal Trade Commission found that 1 in 5 people has an error on at least one of their credit reports. That's like 20% of us walking around with unnecessary blemishes on our financial reputations. First things first, get a free copy of your credit reports from annualcreditreport.com. Yes, it's free once a year, and no, it's not too good to be true. Scan through it like you're looking for Waldo. Find anything that doesn't look right? Dispute it. Whether it's a debt you've already paid or a credit card you never opened, getting these errors removed can give your score a significant boost. Here's a pro tip. Be meticulous. Document everything and follow up on your disputes. It might take a bit of time, but it's worth it. Think of it as cleaning up your room so you can invite guests over without feeling embarrassed. Except, in this case, the guests are lenders, and your room is your credit report. Chapter 4. Lower your credit utilization ratio. Now, let's tackle the credit utilization ratio. Remember, this accounts for 30% of your credit score. High utilization can be a red flag to lenders. It's like saying, "I'm using a lot of my credit because I really need it." Not the best look. Here's an easy win. Pay down your balances. Sounds simple, but it's super effective. Even a small payment above the minimum can start to tip the scales in your favor. Aim to use less than 30% of your available credit, but if you want to be a credit score ninja, aim for even less, under 10% is gold. Another strategy? Ask for a credit limit increase. If you've been a good customer, your credit card issuer might say yes. More available credit means a lower utilization ratio, as long as you don't increase your spending. It's like suddenly having a bigger tank but using the same amount of gas. And here's a creative one. Make multiple payments throughout the month. This can help keep your balance low all month long, instead of just at the billing cycle's end. It's a bit like making sure you don't let the dishes pile up. Stay on top of it, and it'll never look like a mess. Implementing these strategies can be a game changer for your credit utilization ratio, paving the way for a healthier credit score. Chapter 5. Increase your credit limit. Raising your credit limit can be like unlocking a new level in a game, providing you with more room to maneuver and potentially boosting your credit score. But, like any strategic move, it's all about timing and approach. First, why does this matter? Well, it circles back to the credit utilization ratio we talked about. More available credit, assuming your spending stays the same, means a lower utilization percentage. It's like being given a bigger playing field but choosing to play in just one corner. Here's how you do it. Start by proving you're a responsible spender. Pay your bills on time, every time. Use your card wisely, showing that you're not just about hitting the limit every month. Then, after you've shown some solid financial habits, reach out to your credit card issuer and request an increase. Some might do a hard inquiry on your credit, so it's a good idea to ask about their process first. A quick tip. If you've received a raise at work or your financial situation has improved, mention it. It shows you're more capable of handling increased credit. Remember, with great credit comes great responsibility. An increased limit isn't an invitation to spend more, it's a strategy to build a stronger credit score. Chapter 6. Deal with late payments. Late payments can be like stumbling blocks on your path to a high credit score. They signal to lenders that you might not be the most reliable borrower. But don't worry, there are ways to deal with them and get back on track. First, prevention is key. Setting up automatic payments can be a game changer, ensuring you never miss a due date. But if you've already missed a payment, the first step is to pay up as soon as possible. The longer a bill goes unpaid, the more it can hurt your score. Here's something hopeful. If it's your first time slipping up, consider reaching out to your creditor. Sometimes, if you have a history of timely payments, they might be willing to forgive a first-time late payment and not report it to the credit bureaus. If late payments have become a bit of a habit, it's time for a change. Start by creating a budget that prioritizes your debts. It might also help to contact your creditors to discuss your options. Some may be willing to adjust your payment plan to something more manageable. And here's a silver lining. The impact of late payments decreases over time. Consistently making on-time payments after slipping up can help to gradually mend your credit score. It's all about showing that you're committed to being financially responsible. Chapter 7. Diversify your credit mix. Did you know that having a variety of credit types can actually boost your credit score? It's a bit like a balanced diet for your finances. Lenders love to see that you can handle different types of credit responsibly, from credit cards to student loans to mortgages. This variety accounts for about 10% of your credit score. But why does this matter? Diversity in your credit accounts demonstrates your ability to manage multiple payment schedules and credit types. It's like juggling. Showing you can keep all the balls in the air is impressive. If your credit portfolio is looking a bit, well, one note, consider branching out. But, and this is crucial, only take on new credit if it makes sense for your financial situation. Don't rush out to get an auto loan just because. It's about strategic choices. For instance, if you're already planning to buy a car, financing it, and making timely payments, can add to your credit mix and potentially boost your score. Here's a tip. If you're not in a position to take on new types of credit, even being added as an authorized user on someone else's credit card, more on this next, can enrich your credit mix. Chapter 8. Become an authorized user. Becoming an authorized user on someone else's credit card can be a quick route to a better credit score, especially if you're new to credit or looking to rebuild. It's like getting a piggyback ride on someone else's good credit habits. Here's how it works. You're added to another person's credit card account and get your own card, but the primary account holder is still responsible for the payments. If they're the type to pay on time and keep their utilization low, their good behavior positively affects your credit score. But, choose your credit partner wisely. Their mistakes can also reflect on you. It's like being in a three-legged race. You want a partner who won't trip you up. And for the account holders thinking about adding someone else, remember, you're responsible for any spending they do. Make sure you trust the person you're tying your financial laces with. Becoming an authorized user can be a great strategy, but it's not a standalone solution. Combine it with other practices we've discussed for the best results. Chapter 9. Limit new credit inquiries. Every time you apply for credit, a hard inquiry is made on your credit report. Think of it as someone checking your financial pulse. It's necessary, but too much poking can make your credit score feel a bit under the weather. Each inquiry might only knock a few points off your score, but if you're shopping around too much, it can add up. Here's the strategy. Be selective about applying for new credit. It's like RSVPing to parties. You don't have to attend every one, just choose the ones that really matter. If you're looking for a loan or a credit card, do your research first. Many lenders offer pre-qualification tools that let you gauge your chances without affecting your credit score. It's a bit like peeking at the cards without showing your hand. Also, if you're shopping for a car or a home, try to do all your loan shopping within a short time frame. Credit scoring models often recognize when you're comparison shopping and will count multiple inquiries as just one, as long as they're within a 14-45-day period, depending on the scoring model. Chapter 10. Maintain old accounts. One of the quirks of credit scoring is that old accounts, especially those in good standing, are your best friends. They're like old pals that boost your credibility, showing a long history of creditworthiness. This aspect of your credit score, your credit history length, comprises about 15% of your score. Closing old accounts can shorten your credit history and might lower your score, especially if you don't have many other credit accounts. Here's what to do. Resist the urge to clean house too thoroughly. If you have older credit accounts that don't cost you in annual fees, consider keeping them open. Even using them occasionally for small purchases can keep them active and beneficial to your credit score. It's akin to keeping an old friendship alive with the occasional coffee catch-up. A good move is to review your credit portfolio once in a while. Ensure it's diversified and includes some seasoned accounts. These are like the foundation stones of your credit score castle, offering stability and strength to your creditworthiness. Remember, managing your credit is a marathon, not a sprint. Patience and smart strategies are key. Consistency in your actions will lead to a gradual, but steady, improvement in your score.